What's going on, everyone? What's going on, everyone? Okay, just give me 1 second here. Okay, yeah, so today we're just gonna be breaking down more stocks. Lots of stuff happening in the market. One of the first things I'm actually gonna look at today is CCL because I've been getting a lot of messages about people asking me, Sean, why isn't CCL going up today? Right? They came out with some news that they were going to be rephasing or phasing in travel again with their cruise ships. But for some reason, the market didn't jump today, right? If we actually go and we take a look at we take a look at CCL right now, we're gonna be a little bit surprised, right? There's been 2% change, but if we go to StockTwits, for example, and we look here, look how many eyes are on this thing. Look at the sentiment, right? Sentiment is literally, it's like 80% bullish, right? 77.82% bullish, 30,000 watchers. And if you go through here, people are like, what the hell's going on? Right? Everyone's a little bit confused, right? Oh, similar thing happened here. And I wanted to break down quickly what happened here because I think this is a trap that a lot of people fall into when they first get into trading, which is that they confuse good or bad information with tradable information. And this is a huge, huge pitfall that people fall into and ends up costing a lot of money if we don't check ourselves on this right off the bat. Just because the company comes out with good information doesn't mean that the market or the stock is actually going to jump in price. The reason that this doesn't happen is because the market tries to be efficient. It tries to price in all the future looking information that it has. So for example, like a clear example of this is earnings events, right? So when we analyze earnings events, the way that we do it is we try to say, okay, how big of a move is there going to be on the event? Not how good is the release going to be. How good the release is going to be is only as relevant to how surprising that news is going to be. So for example, if a company comes out and says, we are going to have very bad earnings, and that's it. It's a little bit vague, right? It's like, okay, how bad is bad? Is bad 10% down on revenue, right? Because maybe it's a company that usually does well. Or is it, we have no revenue and we're on the verge of bankruptcy, right? There's a big range of uncertainty that's still in the picture when looking at that stock. But on the other side, if a company, so when that happens, you could actually expect a really big move in the stock price, right? It all depends on what the market's trying to price in. And when it prices in uncertainty, there's still room for a big move. But when we look at a company that comes out and maybe says, hey guys, I'm releasing earnings tomorrow. It's going to be bad. I'm down 40% of revenue. I've had to take a loan, XYZ. All of a sudden it's like, okay, now I have a pretty clear picture of what's going to happen. And if the company comes out tomorrow and says those things, where's the move going to come from? Because the move would have already been priced in yesterday in anticipation of this really bad news coming out. So that's what we need to be careful of when trading the news. We need to be careful that we're not just chasing the news and that we're actually looking at, okay, what is the impact on the market of this news? How much more uncertainty is there? Or maybe is the real play playing the market reaction to the news instead of the news itself, right? And that's that whole thing of like, buy the rumor, sell the news type of thing, or however they word it. That's an attempt to capture that uncertainty and then sell when everyone starts to come in and bid up the volume, bid up the price because they come in after the actual secured news has come out. So these are things that we need to be cautious of when we're trading here. But yeah, for now, I'm going to hop right into just breaking down some trades. If you guys have anything that you want me to take a look at, please leave a comment in the chat box there. I'll be happy to get to it. And if you guys haven't already subscribed, make sure to subscribe. We're actually releasing a really cool piece of content soon. We're going to be releasing an entire library of options information, starting with everything from your brokerage to what options are, how to price them, how to find an edge, right? And we're going to be teaching basically for free on YouTube how to use data to make better trading decisions, starting from ground zero of understanding the product thoroughly. So yeah, make sure to subscribe and let's get right into it. So I'm going to take a couple of approaches today. The first is going to be, I'm going to look at our scanner here. So we have some earnings events we're going to look at, and we also are going to look at some regular volatility plays. So I'm going to start with the volatility plays. And the first thing I'll actually look at is CCL. So I have CCL open here. Basically, CCL is what sparked that little speech I gave at the start about what tradable information is, because CCL came out and said that they were going to be resuming their service, right? They're going to be phasing back in cruise trips starting in, I think, August. And look, this is really good news, but we have to remember, like, right, if we're coming into the market today trying to play that news, that's already publicly known, right? So just because they reconfirmed it today or last night doesn't mean that there's going to be a big jump in the stock price. You had a bunch of people coming in, bidding up. Look, if we look here, we actually have some call skew. What this tells us is the demand for calls is actually going up. Don't forget how big this company is and how many people are trading it. That's why you see this put skew, right? So this graph tells us the further up the left side is, the more demand for calls. The further up the right side is, the more demand for puts. And as we can see, of course, there's huge demand for puts on this thing because it's damn near the verge of bankruptcy, right? So we have some big firms that have money in this that are trying to hedge their positions. But then we're also seeing this on this side. It starts to come back up on the out of the money calls, telling me that in the short term, there are people betting on this thing having a massive move up within the next 10 days, right? That's what this red line is showing us, the 10 DTE. So when we look at the implied vol, look at this. Like, we're forecasting a move of 93% in the volatility, and the market is pricing in 115 vol, right? We look at the action here. There's a ton of action around this thing right now. It means a ton of people are trading it. So what we can do is we can say, okay, like, everyone's thinking there's going to be a huge move, but where is this move going to come from, right? Obviously, this increase in demand moves it a little bit, but this massive move that people are looking for, there's no catalyst that I can see that will actually drive this. A lot of these people are trading old news looking for new gains, and it's just going to lead to this rabbit hole of averaging down every time the stock price drops, thinking that you're still in at a really good price. And there is some merit to saying that they are pretty cheap right now, but if you're going to be doing that and buying for the long term, you're going to be I'll take a look at both of those, Alex and Usman. But if you're going to be playing this, honestly, what I would recommend is just buy the stock, right? If you think the stock is on sale right now, pick it up. You're getting it for pretty cheap if you plan to hold for the long term. But I wouldn't be buying near dated options hoping to that this thing's going to skyrocket anytime soon. You're looking at least a 1 to 2 year hold minimum, and that's assuming we don't have any more negative macro volatility events. So we've got a couple recommendations for stocks to look at. So I'm going to go through those first, and then after I do that, I'm going to just jump in and analyze a bunch of my own, look at some earnings events, break those down for you guys. So let's take a look at RESI. Hopefully we have it here. So we do not have RESI in the terminal. There's a couple of reasons why that might be. Likely what it is that there's not enough of an options market around it. There's not enough liquidity. So we look at the top 1,450 liquid stocks on the US exchange. So unfortunately that one's not there, but I'd be happy to break down something else for you if you have something with more of an options market around it. Yeah. The terminals. Oh, shoot. Oh, no problem. Just need to refresh it. I didn't see it go down there like that. Yeah, we're constantly doing work on this and stuff, guys. So once in a while, it needs a little refresh. Not a big deal, though. RESI, is it there? No. Okay. So let's just move on to the next one. But if you have another one you want me to look at, just let me know. PTLA. Usman, do we have any news on this one that you want me to be looking at this around? Wow, look at this. Okay, so $17, so a little bit cheaper than what I usually like to be trading options around, but that's okay. Look at this. Implied vol is extremely low, 18%, while realized volatility is 64%. So this is a huge difference. So I need to do a bit more research to really understand what's going on here. And look at this. So we could structure a pretty cool trade here if you think there's going to be massive moves coming. So if we look at the volatility, so realized vol has implied vol has really spiked up in recent times and come back down, while the realized vol hasn't come down as much. Cool. So what's going on here? PTLA. Let's have a look here. PTLA. Let's see what's going on in the retail space. Okay, another pharmaceutical. Okay, so something to do with COVID, maybe. Oh, it's up 128%. Okay, was there like some sort of some news? Yeah, so something clearly happened here. I'm not 100% sure what. I need to just look into it. PTLA news. Let's see. I'll take a quick look here, guys. Oh, okay. So are we looking at an acquisition? Okay, interesting. So they might be getting acquired. So okay, that explains the increase in volatility. We would need to be careful trading around this thing, because if it's being acquired and this is anything to do with the price, this volatility will come back down. So we should be careful here. Before we take a long position, we need to see what the acquisition price is, how much it's moved relative to that, and what's going to happen in the future. Like it looks like this merger is going to happen just from my 2 seconds of research there. So if that is the case, you don't want to be getting involved in the vol space here much more than it already is, right? Look at this relative action, 10 out of 10, right? So, if the options are still actually, if you look at the option chain and it ends up changing how it's pricing it, if it ends up pricing in a lot of moves still, it might be worth selling some options around it. But I don't know if I'd be buying any right now, even if they're cheap, because where's the move going to come from? If they're going to be acquired, we know the price, right? It's already, adjusted to reflect that. Where are we going to really see the next big move, right? It's one of those that you'll still, when it gets acquired, you'll still get a small move up probably, but it's like, is that small move up worth picking up the options in the chance that things go south for us, right? And it ends up costing us a lot of money. That's something we got to be careful about. Have you guys ever looked at stat arb? Yeah. So we have. To be honest, Jordan's actually been more involved in that. I would talk to Jordan Wrong in the chat there. He can help you out with that question. He likes talking about that stuff. Just shoot him a DM or shoot our Instagram a DM. He'll chat with you about it. But for the purposes of this live, I'm just going to keep breaking down trades here. If you have a trade in particular you want me to take a look at, let me know and I'll be happy to do it. For now though, I want to take a look at what earnings there are today, right? Earnings season is one of our favorite times to be trading. So I just want to go here quick. 2020, 05. What's the date today? Is it the 5th? Is it the 5th? Yeah, it is. Cinco de Mayo. Very cool. Okay, so let's see what we got here, right? Let's look at 1630. So today after hours, what do we got coming up? All right. Any of these look interesting to you guys? Let's look at EA. EA's got earnings. So confirmed earnings, implied vol is 6, average move is 5.3. We usually get a pretty small move here. And if you look, buying volatility around these events has been not the most profitable thing. However, we do get these really big moves. So looking at it here, right? And if we look here, Q2, we actually get a large range of moves. So it's hard to predict what's actually going to happen here. There's not a ton of edge in the implied and average move. So I'd actually probably just stay away from this. I don't think there's enough edge here for us to really be taking a trade. One that I think has it tomorrow morning is Disney. Oh yeah, Disney has it today as well. So let me just confirm here. Diz. Yeah, after hours today. Perfect. So let's see. Look at this. So now compare this to EA, right? What we're looking at is the implied move. So what we basically do is we isolate the volatility for the earnings event, right? When we're trying to price out options, we need to know what the volatility implied is, because that's really what they're priced around. They try to predict how big the move in the future is going to be based on, a bunch of different factors. And then they try to match the premium with that. So the premium reflects the expected move in the market. And that's what this number tells us. So when we strip away other volatilities, the earnings event has an implied move of 6% for Disney, 5.93%. Whereas if we look at the last 3 years of moves, we see an average move of 2.358%. So we can look at it here, right? This is the blue is the actual moves, the red is the expected move. So we can see here how this has been, and we can see historically how has buying volatility around these events been. So what we can see here is the market often is overstating how big these moves is going to be, which means that buying volatility or buying like an at the money straddle for these events, like buying it at the market close, selling it at the market open, surrounding the event, has not been a very profitable strategy, right? It's cost you 30% over the last 3 years. Not the end of the world, but what we can see is that it's consistently on a downwards trajectory. So that leads me to believe, like, okay, look, the market often is overstating this volatility, and we're in extra volatile times right now, which means the odds are the market's doing the same thing again. And that's something we've seen time and time again throughout this earnings season. So, when I look at this breakdown here, right, I look at even the distribution of moves, 5.93% move. We haven't ever had it to the upside in the last 3 years. And, there's been one time, like, in the last 3 years that it's happened to the downside. So I would say this is a pretty safe one to be selling volatility around. I think you have some edge here. So what I would do is I would structure a iron condor and I'd sell it. So I'd sell 2 at the monies, and I would sell about 2 standard deviations out, 2 wings, just to cap my max losses. And that's the trade I'd be taking here. Yeah, Alex, damn, I'm sorry to hear that, man. A lot of people are getting wrecked on CCL right now. If you don't plan on holding it for the long term, I would probably get out of the position. If you're trading the options around it right now, especially, I don't know if that's where you'd want to be unless you're short volatility, right? So if we go back to CCL for a second, right, a decent trade here is to be short the volatility, right? It looks like it's actually closing in a little bit, so the edge might be going away. But look here, like, there's all these kinks in the out of the money calls. It's actually adjusted a little bit, so the edge is getting smaller. The market is becoming a little more rational here. I still think there's a small edge for a short term, a little bit of a spread to capture. But yeah, I would be staying away from it for now. It's similar to the airlines. There's enough other opportunities out there to take a look at. I wouldn't be getting too caught up with it. Okay, gonna quickly blast through these. If you guys have any in particular you want me to take a look at, I will. Right, so here's an interesting one. The implied move for MELI is actually lower than the average move. So that's not something you see very often. And you also don't see this, right? Where it's actually been not terrible to sell volatility, to buy volatility here. You have to remember, around these events, there's usually a risk premium, which means that the options are usually expensive. So the option space, there is a case to be made for, doing some filtering and then selling volatility. We're usually on that side, providing the liquidity. But this is one where it actually might be worth taking a long position, right? Average move is 10.3 almost. Implied move is 9.2. What I would do here is I would do some research, try to figure out where there could be a surprise, right? Is there a chance that they're going to come out and really surprise us this earnings season? And if you think that there is, I would buy a straddle, an at the money straddle. There's a decent chance that the size of the move from the event will actually outweigh how much you pay for that option, and it'll be profitable, right? Like, look at this, right? This is our Q2 range of returns for the earnings event. And you see, we do get a huge range, right? Half the time in this season, it's actually like, it's blown through this prediction up to 20%, right? So there could be a lot of money to be made here, to be honest. You could make maybe 100% here, even if it really blows it out of the water. So I would take a look at that. I would seriously take a look. Next up is ANET, Arista Networks. All right, so you're going to see this a lot. The implied move being smaller than the average move. Actually, it's the opposite you usually see. This is kind of rare, right? It's amazing that we're seeing a lot of these right now. And if you look at this, historically, buying volatility, you would have made 17%. So this is another one, right? We get really small moves usually in Q2, which is not something we like to see when we're seeing numbers like this on the page. But once again, right, the implied move is pretty small. Average move has been a lot higher. But it does look like we either get really big moves or really tiny moves. So, it's a high enough value stock. If there's enough liquidity around this thing, I would consider it as well. I think it's a decent enough trade, right? And I know a lot of you guys like the long vol trades, so this is something that could be right up your alley. Definitely worth taking a look at. CLAC. Okay, yeah. So this is one again, right? Consistently been negative, right? Couple upticks throughout the historical buying of volatility. The average, the odds of us seeing a 6% move in Q2 looks like it's pretty low. If we were to get that big move, if we were to get like anything over it, the odds are it's going to be to the downside. It looks like we either get extremely small moves on this or really big moves. So I wouldn't take a huge risk on this, but you could follow what the tool says here. Sell some volatility here, and hopefully you collect some premium. Big thing to note, guys, the reason why I go through so many of these, and then you can actually go back and look at this video again, is if you spread your risk across a lot of these trades, on average, you'll come out profitable, right? So we're always looking for just a small edge, something small to put the odds in our favor. And then we place a lot of trades, right? So this is how earnings are supposed to be traded. A lot of people think that they're just random luck events, right? It's like a huge gamble. And yeah, there's usually big moves around earnings, whether it's more or less than the market thinks. That's really what we're playing. But there is a move. And it's exciting to trade them, and that's why a lot of people do it. But most people don't realize there is a real edge here, right? So we have a real edge trading these events using information like this. So, the reason why I'm going to go through a lot of these right now is just because then you can actually take it and you can spread your risk across a lot of trades. If you come up with anything later in the day you want me to take a look at, shoot me a message on either StockTwits at Predicting Alpha or shoot me a message on Instagram at Predicting Alpha. And I'll break it down for you right there. I'll send you a snapshot from the tool. You can make your own assessment and place trades as you see fit. Big thing for us though is we try to limit our risk to 5 to 7% of the stock. So BYND, or 5 to 7% of our portfolio. So BYND has earnings coming out, right? This is one that's been a lot of the talk recently. It's kind of died off a little bit now, but it's been big news for the last little while. What we can see here, right, if we go back to the vol trader, we can actually see that in the past little bit, realized volatility has been, I believe it has been outpacing. Let me have a look here. Just by a little bit in recent times. And it looks like there's not a huge spread here. It looks like it's been pretty on point. But look at this. We have a ton of action still. Lots of people are looking at this stock. And we have massive call skew, right? So a lot of people are betting on this thing going up. And what's tricky for me right now is normally when I see that, I'd be inclined to be selling these around the event. But when we look here, we can see that the implied move is much lower than the average move, although we don't have a huge sample size. So this is a little concerning for me because it's like there's no direct mispricing for the event, right? So the first step that I always do is I always try to look for a mispricing of the earnings event, because where's a better place to start finding opportunities than somewhere that you have like something that's cheap or expensive. Right now, these things are cheap, right? Options around BYND are cheap, and we're seeing skew. So it's like, I don't know if I'd be trading this event, even though a lot of people like to look at it. But if you have a trade idea for this, I'll be happy to break it down with you. Let's look at DVA. And then we'll take a look at Allstate and maybe a couple others. If you guys have any you want me to take a look at, leave them in the comments there. I'll take a look. So DVA, implied move and average move, basically in line, right? So not seeing any huge edge there. If I go to the vol trader, no major significances in the skew, no major action. IVol and RVol for the 30 days is all in line. Not really seeing much of an opportunity here. No major ops, right? We usually get a decent sized move around Q2. I wouldn't be taking a trade here personally, right? If we look at the P&L for buying volatility, it's basically flat. So, if you're looking for a gamble and you love this company, go for it. But from a trader's perspective, there's nothing really here for me. I wouldn't be taking it. Let's look at Allstate. What's going on there? Okay. So let's have a look. Implied move is, just about 20% higher than the average move, right? Just because these are both small numbers, don't let that confuse you. We're looking at the difference between the two. But what we also do see here is that it's been, not wildly unprofitable. It seems like this thing usually has pretty small moves, right? So an implied move of 4.37% is actually really high for this stock, right? We can see here sometimes in Q2, it actually moves basically zero. So you could sell vol here, right? Let's look at the vol trader. How's the demand? Yeah, you could sell like an iron condor here. If you have some directional bias, you could make it a directional fly. But I wouldn't I think this is actually a pretty decent opportunity to sell vol. It looks like if we are going to get a massively big move, it's going to be to the downside, and it's not very frequent. But 4.37, that's reasonable. That's reasonable. So I would consider, if I was going to take a view here, I'd probably be on the sell side of volatility, selling options into the market. But it's not looking like anything, once again, that I'd really take a trade on. Do you guys have anything you're looking at right now? Let's see here. There are so many earnings events today, guys. This is crazy. Okay, let's look at another pharmaceutical holding company, BHVN. Implied move of 0. There's nothing being priced in for this event. That's kind of interesting. But look at this. Buying volatility here has been, you basically lose your whole account in 3 years. So I would probably not be going near this thing. Right? I would probably be staying away. But unless this is actually accurate, and then I'd maybe be buying some options here. But I do a bit of research to understand why the market's implying such a low move here, or if I'll have to look into it if that's maybe an issue with the terminal. I'll make a little post on StockTwits about it later on today. Implied vol, realized vol has been higher. Yeah, so this is a decent little long vol opportunity if you're seeing something that you like. If you're interested in this company, you could take a long vol position here for sure. Just remember, if you're looking to place a directional bet, the puts are really expensive. So I wouldn't be buying, out of the money puts or anything like that on this stock. Let's look at two more companies here. All right, we got anything interesting in companies that I like? Let's look at Excel. Why not? And we'll look at Iova after. Okay, so once again, look at this, guys. Some of these, the risk premium on some of these trades is absolutely insane. And it's reflected in this historical straddle P&L. Think about how many of these companies we've looked at that you would have lost half to all of your bankroll buying volatility around these, right? This is where the edge really comes in trading earnings, is filtering out opportunities that are either bad buys or bad sells, and just structuring your trades, selling things that are expensive, buying things that are cheap, and staying away from everything that's too gray to really have an opinion on. That's where we get a really big edge, right? That's where our edge really comes from. So looking at this, right, is there really much that I would do here? I don't really know. Implied vol higher than realized vol on average, decent amount of action, right? Average move of 6.4, implied move of 5.9. It's too small. You kind of have a weird situation here where the market's where we're thinking that the market is selling cheap options here, but we know that buying options is historically unprofitable here. So I just don't think enough of the things are aligning for me to really take a trade here, right? We have these huge tail risks of massive, massive moves. We're talking 16.4% up, right? And if so it could happen, and it is a relatively cheap bet, I guess. So if you are long here, I'm not going to say you have my blessing, but I can understand why you would take a position. But I would personally be staying away from it. There's just too many other opportunities to take a look at. Let's look at Iova. Right, that's one that has been all over StockTwits for a while. So I'm sure we'll see something interesting, right? And this is the type of stuff that I really like to trade, right? This is I start salivating when I see this. So market is implying an 11.67% move. Guys, take a look at this stock. 11.67% move implied for the earnings. And we have basically not seen that in the last 3 years. So they're implying a bigger move right now to happen tonight. It's still unconfirmed here. We need to go to investor relations and make sure that it's confirmed. If it's not, that's even better. But the market's implying this massive move. Average move is way smaller. And look at this, right? Look at how some of this stuff actually plays out. Buying straddles historically, last 3 years, you would have consistently lost money until you were down 110% of your portfolio, right? So you would have had to reload to keep trading this thing. And if we look at the distribution of moves, we do get the occasional, really big move, 10%, but we're never getting an 11%, not in the last 3 years, right? This is a quarter, right? Q2 is one that has a big range of moves. But guys, I actually think this is a great selling opportunity, right? You can go in there, sell volatility, sell like an iron condor at an 11.6% implied move, And there's a good chance that the move will fall around closer to this. If our predictions are correct, you're not going to see this big of a move in the stock overnight, right? The earnings are, and we need to do some fundamental research here to really substantiate this claim, which I'm not going to be doing on this live. But if you guys like this opportunity, which I think you should all look into, I would recommend you to go and try to figure out where's the surprise coming from. This could be a case like Carnival where they have a bunch of great things going for them. I think they're involved in the COVID stuff. There's a lot of noise around this stock that could be driving this increase in implied volatility. But we need to remember, just because we know something doesn't mean it's going to make it a big surprise on earnings, because everybody else knows it and the market's efficient. So like if I know today that in 3 days you're going to have an amazing earnings, I'm going to start buying now, and it's going to increase the price now to reflect that really good earnings, right? So we need to find where we have a disagreement with the market or where there's uncertainty. Otherwise, it's likely to be closer to this average move. And that's really good for selling premium, because that means we can collect a huge profit. So, I'm probably actually going to leave it on that one, because I think this is a trade that everyone should go away and do research on right now. I think you'll have a really good, return right here. And, there's a bunch of other trades we looked at. If you have anything else in particular that you want me to take a look at, shoot me a DM on either StockTwits or on Instagram, and I'll definitely get back to you. I'll send you a screenshot from the tool, and I'll break it down for you to exactly what trade I would consider taking on the stock you're looking at. So that's it for today, guys. If you enjoyed this live, we're going to be doing it every single morning, and we have some really cool resources coming out for free through our YouTube. We're really trying to grow this quantitative community here, right? This is stuff that the average person just hasn't had access to, but it creates a real edge for traders in the market, right? This is the types of things that everybody in the 21st century as a trader should be looking at. It's the biggest opportunity for traders, and we're going to be giving out all the education for free. So make sure to subscribe. If you have friends, share it. Let's keep this community growing, and I'll see you guys on the next live. Take it easy.